All righty. Three, two, one. Here, this way. Here we go. Homeboy, Davey, what's happening? Ooh, Jonathan, Econ, Prakash, Jodina, Pat Daddy, Umair, Paul, what's happening, Paul? Lunastar, Call, The Right Way. Ooh, where's the wrong way? T-Pit, 2003. David, thanks for that. David, cool beans. Fladanka, Boss, Tyler, cool beans. Kiggs is here. Homeboy is here. Look at all these people just showing up and showing up. Ooh, wait a second. I need to take a look at my chat. And we have some chat going. Alex, Willie's here. Sup? Sup? Not much. Hidden. It's good. Okay, Rumble, don't need that one. This one right there. There we go. All right, so I think we are good to go. Let's do this thing. Good evening, everyone. This is James from Dividend Stock Talk. Look at this. I actually signed in. I'm going to write hello to myself. Well, hello, and how are you today? 12,000 followers. This dude's got the same amount of followers as I do. He's got a nerve showing up. Well, I hope you do something with the information. There you go. Interesting. Oh, Pink, get ready to stop that early, huh? Akeem, Wakeem. Oh, look at that. Akeem's here. Wakeem is here. Joe's here. EPC. Okay. All right, so let's do this thing. You ready? Good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by The 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, take you along for the ride as I invest in my own trading account, take you along so you actually see exactly what I am doing for a safe, simple, predictable, consistent 1% per week. Now, 1% Pink, how you doing? Angela, how you doing? 1% a week comes to over 50% per year. So here's the idea. The idea is if you can spend 10 to 15 minutes every morning before you start your day to take care of your personal finances and a way to collect, like I said before, simple, safe, predictable, consistent 1% per week. I'm going to show you exactly how I do it. I'm going to answer all your questions. Now, please do me the favor. Ask the question only once, because I will read each and every single question, unless they get a little silly. U.S. government. Well, hello to you too. Well, that being said, how much bankroll do you need to make any money? Well, Michael, it all depends on exactly what your idea of money is. Because if you look at it this way, how you doing? If you look at it this way, Michael, okay? Now, I know Americans have a very difficult time with this. If you earn $34,000 and $32,000, $34,000 a year, okay? If you earn $34,000 a year or more, you are considered richer than 98% or 97% of the rest of the world. The rest of the world at $32,000 to $34,000 a year. That's it. You are in the top 1 or 2% at $34,000 a year. It's crazy. Hey, Wakti Wadani. Yep, you're not a new student anymore, dear. You've been here 3-4 times already. I've seen that. Greetings from India. Namaste. All right, so let's get started. Let's get rolling. Let's take a look at some stocks so you guys will know what it is that I'm doing. And you guys can ask some questions. Julie C's in the house. Like the chart, what's happening? Lindarella, how are you today? All right. So, let's get rolling. Let's take a look at a couple of good ones. We got Intel up on the board, so let's take a quick look at that one. Okay. Willie, how you doing? We're going to take a quick look at Intel, INTC. If you grew up in the 70s, 80s, or 90s, you have a good idea who Intel is. Okay, here we go. Always, when I look at a stock, first thing I always want to see, right here. There we go. First thing I always want to see is the 1-year chart. First, we'll go from there. Sir, why option trading is risky? Option trading is only risky if you don't understand it. That's like brain surgery is really risky for me to perform because I've never done it before. But I'm sure if I've done it 10, 15, 20 times, it gets easier as you go. So, first thing I always want to look at is the 1-year chart. Greetings from Silicon Valley. Oh, Joseph, how are you? Always start at the very first. Here we go. The high of the year, the low of the year. Where was it a year ago? Where is it now? And what's the direction? That's the 5 things. Where was it? High, low, was, is, and direction. Look, down, sideways, down, sideways, down, sideways. Now we're sitting at 2181. So if, by chance, tomorrow I want to buy me some Intel, let's see how the numbers work. All right? So, currently it's at 2181. Now, if you don't know what a covered call is, it's a simple, safe, predictable strategy. Okay? Now, the easiest strategy is just buying the stocks, but there's no predictability to buying the stock. But a covered call is when you buy the stock and you sell to somebody else the rights to buy it from you for the exact same price you just paid for it. So let's go through the equation. Let's do a little sample, and then you figure out if it's easy enough. Sweet Jones, how you doing? So here we go. Currently, we've seen the chart, 2181. Now, if I want to do a covered call, I don't want to do it for this week because there's only 2 days left, Thursday and Friday. Not really enough time. So I want to look at the numbers for next Friday. So let's take a look. Now, this is this Friday, the 24th. We don't want that one. We want the 31st. That's next Friday. I only need to look at this many. I don't have to look at all of them. All right, so if I'm buying it for $21.83, now somebody once asked me how to figure out what strike price to choose. It's really not that difficult. Take a look. At $21.83, the closest strike price means what am I going to agree to? $21.50 or $22? Both of them are very close. Now, the $21.50 is a safer trade. You won't make as much. But the 22, it's still a great trade. Look at the numbers. 22, you're making close to over 4%. 4% for 1 week is over 200% for the year. Now, are you going to get 4% every single week? No, you're not. But for the most part, every once in a while it happens. Why is it so high? Well, they have the earnings report coming at the end of the month. Well, I don't want to hold it until the end of the month. I only want to hold it for 5, maybe 10 days, 2 weeks, 1 week, 2 weeks. 1 week would be perfect. 2 weeks would be better if I can get this kind of return. But here's the thing. Number one, always the number one question, does it make sense? Okay? Does it make sense? That's number one question. Number two, do I like this company? Number three, do I like this company at this current price? Number four, am I willing to hold on to this for the rest of my life or until it hits my target? Well, remember, Intel increases its dividends to its shareholders every single year. That means I get higher and higher and higher and higher dividends the longer I hold it. But that's not what I'm looking to do. What I'm looking to do is just take it for a ride, test ride. Buy it this week, collect 2 or 3, 4%, sell it next week or the week after, and then do the exact same to another company. Now, there are a few things you want to keep in mind. Number one, do the numbers work? Well, in this situation, it does. Number two, is it the right time to buy it? Well, that's the chart. What is the chart telling us? Well, let's take a look at the chart. Now, remember, we already looked at the 1-year chart and took a quick look. That's all you need. It takes 3 seconds to take a quick look. We're looking for 5 things. Okay, the high, the low, where was it, where is it, and where is it going for the past year? Simple. High, low, where was it, where is it, and what's the direction? Down, sideways, down, sideways, down, sideways. Here we are right here. That's the simplified overall, because it's actually quick and easy. Now, you may not know this, but the trading strategy I'm about to share with you was created specifically for my 9-year-old daughter. Homeboy wants to know what other platforms I'm streaming on. Well, I have a podcast, camera over there. I get Facebook here, Instagram here, TikTok here, YouTube here, TikTok there, another YouTube down here, Rumble, Twitch, and another YouTube channel. So right about now, I got like 8 or 9 channels going. But hey, I got a few more to add on to. I'm finding this to be rather fun to see how much craziness I can ensue before I, come up to a streamlined, simplified situation. I'm only going into year number 2 for doing this. Okay, last year, this time was the first time I actually stepped in front of a camera and shared with the public exactly what I do to get that 1% every week. All right, so let's continue. Now, like I said, the chart is going to tell me when is the right time to buy. Okay, so let's take a look. A year ago, we're at $50. Stair steps its way down, making the bottom back in September. Okay, well, that's the bottom. Well, let's zoom in a little bit and take a look at the last 90 days. Well, the reason why I want to take a look at the last 90 days, because that's the last 3 months. Now, 3 months is easier to relate to than a year ago. Okay, because a year ago was a year ago. Lots of different things were happening. But the last 3 months, it's a little closer to home. So here we go. Sideways up, sideways down, sideways up. Okay, simple enough. That's the 90-day chart, the last 3 months. Okay, it looks okay. Nothing to write home about. Let's take a look at the last 30 days. Now, the last 30 days gives you a better idea of where it's moving. So let's take a quick look at the last 30 days. Steve, how you doing? Okay, 30 days ago, we're here right around 20. Kind of went sideways, dipped down here to 18. Okay, then shoots up to 22.50. That was Monday. Now, Monday made a new 30-day high, but it was a down day because she gaps up and then pulls back. Today, didn't make a new high today. So today, we have a lower high and a lower low. It's really not that difficult to figure it out. So look, sideways down, up, now it's coming back down again. Not the greatest time in the world to get into Intel. That's just my opinion. Because from a 30-day bottom to a 30-day top, okay, 18 to 22.50, that's over $4. Well, $4 doesn't sound like a lot, but $4 on an $18 stock, that's the low. From 18 the low, $4.50. Well, that is over 20%. That's a nice little jump. 20% jump. Yeah, that's going to be profit taking. And there'll be enough profit taking to bring this price back down to here where I'll look at it again. Until then, I'm going to put it off for another 2 weeks. I'll take a look at it again in 2 weeks because then it might show up and be okay. Not today for Intel. I should say not this week and definitely not next week for Intel. For me, you guys got to make up your own mind, but for me, it's not this week. All right, done. I think that recording was pretty good. And we're going to save that. Save it to drafts. And let's do another video in a couple of minutes as soon as we find another good stock to look at. So that's my opinion on Intel. That's kind of how I run it. If I can find a good stock, as a matter of fact, I'm going to answer a couple more questions, and then we're going to take a look at Macy's, because Macy's was a great play this week, and it's probably going to be a great play for next week also. So you might want to stick around for that after I answer a few questions, and then we'll take it from there. Andrea, James, could you show an example of rolling a covered call? In my case, British Petroleum. Okay. Eddie, I'll send you a TikTok here for Pfizer. All right, Eddie, we'll take a look at Pfizer. Let's get a couple more questions under our belt first. Andrea, British Petroleum, in my case, is in the money. How far? Oh my goodness, how many questions did I miss? Oh, that's way too far. Let's keep on going. Sorry. On TikTok, there's a big roll of questions, and I have to go through which questions I'm trying to answer all. I do try to answer every question. Very new. I don't even know where to start, but I would love to start with any coin that, yeah, okay, Andy Williams, I don't do coins. Terribly sorry. Dividend stocks only. Say, I invest in dividend stocks for weekly cash flow. I don't do cryptocurrency. I don't do Forex. I don't do quick, what do they call those things? Fast contracts or quick contracts. I forget what the name of them. Dividend stocks for investing. That's it. That's all I do. Okay? There's an old saying, or at least an old saying where I grew up with a time frame of the 60s, 70s, and 80s. We had a mantra. If it works, don't mess with it. Okay? I get 1% every single week, simply, safely, predictably. Why would I want to mess with that? If it ain't broke, don't fix it. I'm doing fine, thank you. How much do I need to invest if I want to make $500 a week? $50,000. How's that, Laurie? 1% equals 500. Well, what's the other? Well, 1% of 50,000 is 500. Okay. Andrea, hey James, can we look at the cover called British Petroleum? TikTok, don't. Okay, in my case, you got 30. Okay. I'm not quite sure how to do that here. Greetings from St. Louis. Woo, there people actually live there. Cool beans. I hope you're enjoying the weather. It's chilly here. It's supposed to get down into the 30s tonight. Are you kidding me? I didn't move to Florida to be cold. Anyway, let's keep on going. Wakdi Wandani wants to take a look at Chevron. We'll take a gander at that one. Don't forget Red Note. Lindarella, you got to give me the ticker symbol for Red Note. CVX. CVX. Here we go. It's Chevron. Oh, yeah. We're going to say no to Chevron this week. Who came up with that one? I forget who came up with Chevron. But look at this. Now, this boggles my mind when people want to jump into something without looking first. That's like, let's jump first and then figure it out. Well, look at Chevron for the last 30 days. 30 days ago was the 30-day bottom. Okay? Friday was the 30-day top. What usually happens after a 30 top? Usually it drops. So Chevron, don't get me wrong, I love the company, I really do, and I have bought it many times. But at this moment in time, hi, you need to bring that motor closer to your glasses. Yeah. No, I don't, okay? I have my setup the way I like it. I'm comfortable, okay? I got one computer here, right in front of me. I got one monitor over there. I got one monitor behind me. Everything is nice and flows nicely. Okay, sorry, I can't see the monitor that far away. And I don't want it right there in front of my face. Maybe it might be a good idea. I don't know. I'm still working the bugs out. I'm getting some more hardware, getting some more software, trying to figure everything out. You got to remember, I'm retired. I really don't feel like working again. So this is just like a hobby for me. Damn, glasses don't hit. I have no idea what that means. Yeah, it's time for me to get bifocals. Hell no. I don't like the idea of bifocals. But it's probably that time. Yeah. No, I'd rather just do this uncomfortable thing and you're just going to have to deal with it. Sorry. All right, so Chevron, don't get me wrong, I like Chevron, I do, but why would you be looking at it when I say never buy something you don't understand? If you understand it, you have a good idea where it is, what it's doing, hypothetically speaking. So if you know what Chevron is, well, the high was 2 days ago, last Friday. Yesterday was a down day. Today's a down day. So from 140 to 162, that's a $12 increase. Okay, it's about an 8% increase from here to here. 8%. Not huge, but still enough to get some people to abandon ship and say, hey, I got a profit here. Let me take it. Let me move on. Well, great. Well, that's what they're doing. It looks like that. So how long is that going to take effect? It takes as long as it takes. Okay? It drops down. Once it hits bottom, it will turn around and go back up again. I'm saying 2 weeks. So I'm going to put Chevron down for 2 weeks. And Intel. All right, so I got a halfway decent list to take a look at in 2 weeks. All right, so let's keep on going. Don't forget Red Note. Okay, Lindarelli, you got to give me the ticker symbol for Red Note. I've never heard of them, so I'm kind of curious why we're going to look at it. All right, Harley Davidson. Ooh, now Harley Davidson doesn't come up that often. Okay, Harley Davidson had another down day today. And yes, I do own some Harley Davidson. Because when we first looked at Harley Davidson last quarter, the fourth quarter of last year, the numbers were just too good to pass up. Yeah, well, after those numbers came and went, now we're down to 0.5% a week with Harley Davidson. Now, don't get me wrong, 0.5% still comes at 26% per year, but the 0.5% kind of takes away from that 3, because the first 3 weeks we got 3%, 3%, 3%, 3%. That's 9% in the first 3 weeks. That's almost a 10% increase. Well, actually, it was over 10% increase for 1 month. Well, great. Well, now it's only giving us 0.5% until it gets back up to where we jumped in. Now, I jumped in at 35, which is up here. Look at where it is now. It's a big difference. See, 35 is here, and here we are now, 28. Yeah, I got a long way to go before I get out of my Harley Davidson. But here's the thing. I continually sell options against it every single week, so I bring something in. Now, I do get to collect the dividends every 90 days. Okay, fine. And I get 0.5% every week, maybe 0.75% once in a while. But for the most part, about 0.5% a week. Okay, 26% a year. I'm okay with it. Because I do have other companies that give me more. So I average out about 1% every single week. Okay. Ron Meisner, how are you today? Now, Ron, I'm going to apologize for the camera quality on Facebook. I do have other cameras, and I am streaming on other channels. It's just that Facebook, the camera, is not the greatest in the world. So I want to apologize for that, okay? There you go. I missed the question over here on YouTube. I saw it flash on the screen. Do you have Screaming Eagle pipes on your Harley? No, see, you're gonna hate this, dude. You really, okay? I traded my Harley in for Goldwing. Sorry, okay? Something about hitting that reverse button and just going reverse. See, when you're my size, I'm not huge. I'm only like, 160 pounds, and I'm driving a full dress Goldwing or full dress Harley. Yeah, those suckers are heavy. The nice thing about the Goldwing, you flick a button, press a switch, and it backs up for me. Yeah, sorry. As much as I liked my Harley, yeah, I got rid of it for the Goldwing. Thank you. Okay. Now, Goldwing, here's a funny story about my Goldwing. I'm driving around my Goldwing, and I get a flat in my back tire. So, wobbles all over the place. I said, I ain't driving this because it's dangerous driving a motorcycle with a flat tire. So I call the tow truck, and the tow truck driver says to me, I don't ever remember towing a Goldwing before. He said, Harleys all the time. I'm always towing Harleys. Never Goldwings. I said, well, I got a flat. Nothing I can do about it. But it was kind of funny that the tow truck driver says, I have hardly never picked up a Goldwing, but I pick up Harleys all the time. Tells you something. Okay? All right. So let's keep moving along. What do we got here? Uh-oh. I missed that. Oh, boy. Okay, here we go. Live. Credit. Rule Breaker. Oh, my goodness. Rule Breaker wants to take a look at VOO. Well, I needed someone to pick on tonight. Let's do it. Now, when I say, okay, now, I don't want to make you feel bad. What's your name? Rule Breaker. Rule Breaker, I don't want you to feel bad, but I do need someone to pick on, and I do need someone to give me a piece of crap to take a look at. You just so happen to be the first one to give me in what I believe, my opinion, to be a piece of crap. Let me explain. Let's pull it up. VOO. Okay. Look at where it is at the moment. 557. Well, number one, it's at the high. I don't want to buy at the high. But here's the reason why I don't like it. Okay, it does have weekly options. Okay, fine. But here's the thing. Let's go back and take a look at a financial website and find out the details of VOO. That way you have a better idea why I don't like it. Uh-oh. Come on. Here we go. Here we go. And why is that not working? Okay. I want to go to right here. Alrighty. Hold on. We're going to get in there. We're going to VOO. VOO. Now, I'm on Yahoo Finance. It took me a while to be able to find the black background with the white letter because it usually just pop up white, be very bright. Walgreens had a 2.2. Okay, we'll take a look at Walgreens today. WBA. But let's take a look at VOO. What are we looking at? Oh, this is just a quote. Okay, first and foremost, let's go to historical data. Because first and foremost, I want to see how often has VOO increased its dividends. Because in my humble opinion, I want to buy a stock that is consistently profitable. Now, if you understand anything whatsoever about dividends, the dividend is a portion of the profits the company makes that they give back to the investors, and that's us. Okay, there's 9,834 different companies you can invest in at any time. Half of them pay dividends. They share their profits. The other half take all the profits, put it back into the company for capital growth. So if you're here looking for a tip or some kind of a cue or a clue or something on a stock to buy where it will just go up and up and up, no, that's not what I do at all. That's capital appreciation. No desire for that whatsoever. I have no desire to take my money, put it into a stock, and wait and wait and wait and wait for it to go higher and higher. Terribly sorry, I'm retired. I need money coming in on a consistent basis to pay my bills. Okay, weekly cash flow. Capital appreciation for you younger folks aren't quite retired yet. Great, you're in the wrong place. Terribly sorry. I appreciate your attendance. I appreciate you wanting to be educated and ask questions. Great, but you're definitely in the wrong place. I'm looking for strictly cash flow on a weekly basis, which means I could care less if the stock goes up. But what I do care about, number one, you ready? Consistency of profitability. Does that make sense? Consistency of profitability. If I'm going to take my money and put it into a company, I want to make sure out of the 9,834 different companies that I'm only putting my money into companies that are consistently profitable. Who are they? The dividend kings, the dividend aristocrats, dividend champions, dividend contenders. And then we're going to throw in Warren Buffett's list just for the fun of it. Because if it's good enough for Warren, it's good enough for me. That's my philosophy. Okay? So if you like companies such as Blockbuster, wait a minute, Blockbuster. I was going to say Blockbuster. Okay, Netflix, Amazon, Palantir, Nvidia, Tesla. You like those companies, you're definitely in the wrong place. They don't share their profits. They don't have dividends. And I'm going to explain to you why a dividend is important to me in a little bit. But let's take a look at VOO and let's see how consistently profitable are they. Okay, do I like BN? I never heard of them. Sorry, if I never heard of them, usually it's not going to fit. We're going to take a look at, okay, you ready? I'm going to show you, okay, using historical data. Okay, you can get this anywhere. I use Yahoo Finance. You can use Google Finance. You can use NASDAQ information. You can use information from the CBOE. You can use information wherever you get your financial information from. Do I like Boeing? It depends. Okay, give me a minute. Cisco. We'll look at Cisco in a little bit. Okay, but remind me a little bit. Let's finish up with this. I'm going to show you the dividends for VOO. All right? Now, let's go. First and foremost, 2010 was the first dividend, which means they only have 15 years. So they've only been in business for 15 years. And they're $557. If I can make 1, 2, 3% every single week on a $10 or $20 stock, why would I put my money into a $557 stock? But hold on. Wait, you'll see. You'll see how much. Yeah, I know who it is. I know. Thank you for telling me, but I already know. I'm just sharing it with the rest of the audience. He said it's the Vanguard ETF. I know what it is. Vanguard ETF VOO. This is one of those pieces of crap that's trying to ram down your throat and say, buy this, buy this, buy this. Let's go through the numbers and I'll show you why I think it's horrible. That's just my opinion. Okay, we're all entitled to our own opinion. Here we go. 15 years. 56. Well, that's good. 53. Wait a second. That's going backwards. Okay, aren't dividends supposed to increase? So why is this one going backwards? The very second one. The first one's 56. The second one is 53. That's going backwards. That should tell you right there. Why am I investing? Okay, hold on. It gets worse. It does. Okay, here we go. 56, 53. That's one. 53, 57, 58, 69, 57. There's two. 64, 69, 94, 67. That's three. Backwards. 74, 79, 91, 78. There's four. Backwards. 81, 88, 98, 90. There's five. 95, 109, 101. That's six. 95, that's seven. 88, that's eight. 8 times, and we're not even 2016 yet. Okay, it's 88, 2016, right here. Okay. 130, 1, that's 9. 101, 118, 118, 108, that's 10. 116. 116, 121, 129, 146, 139, that's 11. 130, that's 12. 143, 118, that's 13. I can keep going for the rest of the way. It goes up, it goes down. It goes up, it goes down. 3 steps up, 1 step back. 3 steps up, 1 step back. No consistency of profitability whatsoever. But wait, it gets worse. You're probably thinking to yourself, how the hell could it get worse? Well, already we have number one, it's overpriced. I don't do stocks over $250. Number two, it's not consistently profitable. Number three, only 15 years of dividends. Okay? Number four, let's take a look at number four. Now, we're going to go and take a look at the summary. Now, the summary basically gives you the details on how good or bad the stock is. Here we go. Vanguard S&P 500 ETF, VOO. $575.61. Yay, yippee. Here we go. You ready? The close, the open, the high, the low, the range, blah, 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 blah. Look at this number right here. The yield. Hold on. The yield. I can't stop laughing. The yield. 1.24%. Not for the day, not for the week, not for the month, not for the quarter, but for the year. For the year, you're putting your money into this piece of crap and getting 1.24% per year. Explain to me in a manner as if I was a 4-year-old child that doesn't really understand very well. Explain to me why you think 1.24% is better than 50% per year. I'm waiting. Okay? See, companies like this, ETFs like this, They get you by saying, we're going to give you a dividend every month. Well, great, yay. But look at the yield you're getting. You'd be better off putting your money into a CD. Or better yet, give it to the federal government. The federal government is at least paying 5%. Or a high yield savings account. Those are 4.25%. This piece of crap, 1.25%. And you think that's good? Seriously? I don't mean to pick on you purposely. You specifically. But every once in a while, I'll have someone who bring up something like QQQ, SPY, VOO, JPE, JPEI, JPEX, all that crap. It's all the exact same. They give you 1%, 2%, 3%, 4%. Next. So, needless to say, VOO, in my humble opinion, if you do not read the data, if you do not look at the numbers, why are you putting your money into a company that is not consistently profitable? Hold for 1 second. I want to show you something. You're going to say, holy shit, I didn't know that. So let's go back. Hold on. Come on. Let's go back to historical data. Okay, and we're going to put in MSFT. Okay, we're going to look at historical prices. Okay, dividends only. We're going to look at maximum amount. That means all the dividends we're looking at. The share price basically 24. Share price increased by 25% for VOO. Right. I bet it's get an F dividend. I have no idea what that means. Okay, so just for the fun of it, let's look at this. Now, my humble opinion, this is a better deal. Just my humble opinion. Okay, let's look at the numbers. Are you ready? 2004, 8, 9, 10, 11, 13, 16, 20, 23, 28, 31, 36, 39, 42, 46, 51, 56, 62, 68, 75, 83. Every single one was higher and higher and higher and higher. These are the companies that I look for. This is just Microsoft. Microsoft has 25 years of increased dividends. Well, we have companies such as GPC, Genuine Parts Corporation. 7 decades. That's 70 years increase. Year after year after year after year after year after year. The Dividend Kings, 5 decades, 50 years of increased dividends. That means every single year they're profitable. More so than the previous year. More. Isn't that what we're looking for? Why would you put your money into a company that is not consistently profitable? 3 steps forward, 2 steps back. 3 steps forward, 1 step back. Why? It makes no sense. Before you put your hard-earned money into anything, check the numbers. It's not that difficult, and it's free. You don't have to pay anything to find out, well, is VOO a good place to put my money? When you used to walk to school, Dom Riz, when you used to walk to school, did you have to worry about the T-Rex mauling you? Oh my goodness. The funny thing is, I actually did walk to school a couple of times. I did. And I did walk to school once in a blizzard. And no, there wasn't any T-Rexes back there, but thank you for the old joke, okay? What platform are we using? This is Thinkorswim. What is a good weekly gain on a covered call? 1% or more. Boy, snap. Sherman. When a company is not scale up or not grown company, has a cash, didn't put in growth, then the company give a dividend. Okay, Sherman, companies have 2 choices. Take the profits, put it back into the company for capital growth. Or take the profits, give it back to the investors. As an investor, you can decide which group do you want. Half of the companies pay a dividend. Half of them don't. What are you looking for? Are you looking for your money to grow without taking any money out? Well, you're looking for capital appreciation. I'm retired, which means I'm not going to punch a time clock for anyone again for the rest of my life. My working days for a paycheck is done and over with. Okay? I still work, but I don't get paid. I go to my mom's house and I help down there. I'm putting a new roof on and rebuilding the shed, doing the landscaping because of the hurricane. Yeah, I'm not getting paid. Okay, when you retire, you keep working, but you just don't get paid. But you know what I mean. Retirement. You're either going to get a pension, rely on Social Security, take a draw from your investments. I thought you were so old and the dinosaurs shared the world. I bet them glasses on the dinosaurs. All right. Someone's got to, all right. Anyway, let's keep on going. So, simple, safe, predictable, consistent. I want companies that are consistently profitable in at least 2 decades. VOO, 15 years. All right, another 5 years, maybe. But still, they have all those years that they didn't make a profit. Okay, so if I'm making a profit this year and next year I don't make as much money, well, why would anybody give me money if I'm not consistently moving forward? That's all I'm saying. If you're not consistently making money, why are people investing in your company? All right, let's keep on going. Purchased Coca-Cola at 62, sold covered call 63 for $24. Now Coca-Cola is 61.28. Would you sell a covered call 2 weeks out or only 1 week? Okay, so Raphael, awesome, great example. Let me pull up Coca-Cola so you can actually see what we're talking about, so everyone else can see what we're talking about. All right, so Coca-Cola, K-O. All right, now don't get me wrong, Coca-Cola's a great company. They've been around for over 140 years. All right, here's our high, here's our low, here's where it was, here's where it is. Okay, she shoots up, she pulls back. Okay, the high is right around 74, the low is right around 58. Well, here's where we are right now. All right, we'll take a closer look. But before we do, take a look at the numbers. Currently, it's at 61.80. The closest strike price is going to be 62. And the 62 is only selling for 54 cents, which is less than 1%. I personally wouldn't do it, but he already did it, so let's take a quick gander. Now, all right, you said you sold the 63s. Well, more than likely, that 63 is going to expire worthless. Okay? So hypothetically, you could let it expire this Friday and do another one next week and pick up a little more. Hi, do you trade Dow? Yes, I do. The premium looks good and the stock is down. Okay, team, hold on a second. Dow, we'll write that one down. So I can't tell you what to do, but here's the thing. Coca-Cola has increased its dividends to its shareholders for more than 5 decades. Now, to be 100% honest with you, dude, I've never heard of EAT. Never heard of that company. So I hope you did your research on it. Does it have consistently increasing dividends and does it have weekly options? Or are we just wasting our time looking at it? It's, I'm a Gen Xer. Don't expect an apology from me. If you ask me to look at something that doesn't fit, I'm going to call you out on it. Because it's a very simple rule. I like consistency and profitability. 2 decades, that's 20 years, okay? And weekly options. If I'm looking for weekly cash flow, the only way I'm going to get it is weekly options or sitting in front of my computer all day. And that is a hell no, okay? So let's keep on going. Coca-Cola. Now, granted, you bought it at, did you say 62.50? 62.02. Now, see, if you gave me the date, I give you a better idea because it was at 62 last week. And then it was 62 4 weeks ago. So what time did you buy? Did 4 weeks ago or last week? They own Chili's, one of the strongest stocks on the company. Okay, fine. But do they have 2 decades of profitability? And do they have weekly options? That's the question. I honestly don't care who they own or what they do. Consistency in profitability. That's what I'm looking for. There's 9,834 companies. Why should I invest in that one? That's my question. Why should I invest in it? Well, my criteria. 2 decades of increased profitability and weekly options. That's my criteria. You guys can come up with your own. When the men should retire, what should the wealth, is the wealth of man retirement? I have no idea what that means. It sounds like one of those riddles. All right. Anyway, let's keep on moving. So it would be nice, Raphael, if I knew if you bought it on Friday, because on Friday it was a 62, then I'd be asking, what the hell did you buy it for? Because your bottom is right here. However, if you bought it here, I'd be asking you the exact same question. Because as she's going down, what would be the sense of buying it as it's going down? So the only time this thing has hit 62 was 4 weeks ago as it's dropping, which never buy as it's dropping. And next time it was at 62 was last Friday at a high. So besides that, because I have no idea when you bought it. You just give me the information you are. So hypothetically speaking, the 63 covered call should expire this week. Okay, you keep that money and you take that stock into next week. So now the stock's at 61.28. Okay. John, I really don't know. I can speak some Russian, but I can't read it, dude. Sorry. So, depending on what you want to do, now, number one, you will get higher and higher. Don't try to catch a falling knife. Thank you, Michael. So, depending on, do you like the company? Well, I love Coca-Cola. They increase their dividends every single year. Okay? It's none of this VOO crap, up, down, up, down. No. Coca-Cola is steadily increasing year after year after year. That's, it's a good one. But, here's the thing. Okay? The 63 will expire worthless. Okay, this week. So next week you could sell the 62. Well, next week the 62 is going for 54. Not quite 1%. But still, what is it, like 0.75%? And 0.75%, well, it's not 50% a year. Maybe it might be 35 to 40% a year. That's still not that bad. And it's Coca-Cola. They're not really going anywhere. I can almost guarantee that Coca-Cola is going to be making Coca-Cola in the next 10, 15, 20 years. But do you like it? And are you willing to hold on to it until it hits that target of where you bought it? Okay, because you never want to sell for a loss. Remember rule number 2? Never sell for a loss. All right, so let's keep on going at some more questions. More questions. All right, because you can't hear no sound. I can't help you with the no sound thing, dude. I mean, I'm streaming on 7 or 8 different platforms. If you can't hear me on Instagram, I don't know to tell you. All right, Master of Coin, New York. Okay. Walgreens thought it, if stuck in after last week's drop, averaged 11.80. Covered call expires Friday. Okay, let's check it out. I like Walgreens. Okay. Walgreens. Here we go. You ready? Last year, Walgreens is up at 24. Drops all the way down to 8 in November. Well, and then she shoots up here. Now, you know why she shot up here? Because there's an offer on the table for a company to buy out Walgreens and bring it private. Well, that's great. All right. Let's go take a look at the numbers. What if it never comes back to the entry price, though? Yeah, Mitchell, I hear that. And that's part of rule number 1. Never buy something you're not willing to hold on to for the rest of your life. This is investing. Okay, a little bit of a twist. It's trading and I don't know what you want to call it because it's trading and investing at the same time. I'm buying stocks that I would normally buy and hold for the rest of my life. I have no problem whatsoever buying Walgreens at $11.62 and holding it until the day I die. No problem with that whatsoever. And that should be the intention every time you buy something. Okay, they've been around for over 100 years. They have increased their dividends consistently. There's 8,700 stores worldwide. Maybe one day you will start your own network broadcasting live all media. No. I enjoy my life as it is. I come and go as I please. I do what I want. GM premiums. Team wants to take a look at GM. Okay, GM is on my list. It's one of my favorites. Okay, so let's keep on going. Okay, so you're concerned. You bought it at $11.80. Ah, shit. Hold on a second. Increased dividends, yet the stock is at 1990 lows. Yeah, I get that. ABV. ABBV. See, now, I love it when people tell me. Seriously, I do. They compare what it was 10 or 15 years ago to where it is today. Okay, you're under the assumption that I buy something and I hold on to it long term. No, not at all. I'll buy it this week and be out next week if the numbers work. And at this moment in time, no, they do not work. So I'm about to, Raphael, okay, not Raphael, sorry, Master of Coiny, okay. I'm about to give him a piece of my mind which he may not like. Ennis. Okay, Sherman, you actually got to give me the ticker symbol. ENNIS. I don't think that's the ticker symbol. So let's get back to this one. Okay? Master of Coin. Why the hell would you buy this thing at 1180? Okay? Hold on, last 30 days. Okay? So 1180 is right here, last Monday. Why the hell would you buy it there? It's an honest question. Think about it. Your 30-day bottom, okay? And then she does this gap up. This gap up right there should tell you to stay away from it. Because with a gap up like that, when it's way above the moving average for the last 2 or 3 weeks, that's going to tell you there's going to be profit taking. Yeah, it went up a little bit, but then it came back down again. Now you're stuck in a position trying to figure out what the hell do I do? Well, you're going to have to wait for it to go back up again. Because why you buy out of the range? Because down here at 9, you bought it at 11. 11 is $3 more than 9. See, it was trading here at 9, and you bought it at 11. That's $3 higher. $3 on a $9 stock is 33%. If a stock jumps up 33%, you should not be jumping into it. Because what happens after 5 or 10%? People start taking profits. People start taking profits, stocks drop. It's basic arithmetic. Okay, think to yourself, if you're an investor and you're looking to get a nice return on your money, you buy a stock, it's in the $9 area 2 weeks ago. Then she jumps up 30%. Then you jump in. Then you have to ask yourself, what the hell are you thinking? Because stocks go up and then they go down. And then they go up and then they go down. But if you look closely, they don't jump that much, that instantly. What stock are we looking at? That is Walgreens. Sherman. Everybody long-term in life gets way these deserves. People always be saying that life is not unfair, but the reality is life is very fair, the only thing except for that fact. Okay, Sherman, thank you for that. Okay, so here's the thing. Buying a stock, don't get me wrong, it's a great idea, but there's a right time to buy and a wrong time to buy. Okay, stocks go up. Let's pull this back a little bit. Okay, that's kind of good. That's 90 days, about. Okay, look, stocks go up, stocks go down, stocks go up, stocks go down, stocks go up, stocks go down, stocks go up. Now, I've never heard anybody, I've seen people do it, but I never heard person doing it as advice. Buy it at the high and wait for it to go higher. I never heard that. Seriously, I haven't. Now, I've always heard people say buy at the low and sell as it goes higher. Now, you got to know what you're looking for before you even jump into this game. Are you a kind of person who buys a stock and waits for it to go up? Well, you're in the wrong place because that's not what I do. I want to know ahead of time, what am I going to make? There's where consistency and predictability comes in. Remember, simple, safe, consistent, and predictable. I want to know ahead of time what I'm going to make. You can't do that with just buying a stock. You can do that with a covered call, though. And let me do an example, okay? I don't really want to use this one because this is not the right time to buy it, in my humble opinion. Because when she goes up, there's profit taken, and then she drops. Once you get, I'm going to zoom into this section right here. From here to there. Okay? Here's the high. She comes down, 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 shoots up, pulls back. Look at this bottom right there. 1 day, 2 days to the upside, and then the third day is where you jump in. That's just my plan. Okay, if I like the company, good. I like Walgreens. I watch it every day or every week, and I look for the setup I'm looking for. And it's weird because I try to tell people I don't want to sit in front of my computer looking for a setup, but I do. But I only spend 10 to 15 minutes a day. That's it, because it's not that difficult, because I'm not doing as much research as some of you guys are, because I'm looking for the simplicities in life. Okay, up, down, up. Okay, great, it's going up. This is where I want to jump in. It's that simple. Okay, now, if it looked like this, that's not where I want to jump in, because see, I wanted to jump in here. It made the big jump. Now it's time for me to get out. First day I don't understand what you're saying, because I have investor's mindset. Now I understand what you're looking for. All right, thanks, Sherman. Okay, no, Sherman, everything explains itself as you progress. So the very first thing you want to do, very first thing, is agree to change your mindset, because this type of investing is totally different than anything you've seen before. I'm looking for weekly cash flow. I'm looking to jump in on a Monday and hopefully be out on a Friday. Okay, we weren't trained that way. We weren't taught that way. We were taught by a good company, hold on to it for decades. That's what we were taught. Well, this is totally different. That's number one. Step number two, find yourself a stock list. Well, what's a stock list? A company, any company that you like, that fits all the parameters you're looking for. For me, consistent profitability, weekly option. That's it, just two. Two criteria is all I'm looking for. And the weird thing about it, those two criteria knocks out 98% of everything in the stock market. So 98% I have no desire to look at. But that 2%, that's about 300 different companies. Well, great. Now I have 300 different companies. And I'm going to be honest with you, I do not have enough money to invest in all 300 companies at once. I don't, to make any difference, especially if I'm just collecting the dividend, because dividends are usually 2, 3, 4, 6% a year. Yeah, no, thank you. That doesn't work for me. Okay, so I take all those companies, that 300. How much money do you need to start this way trading? You can start with $50. You don't need a lot to start, but if you want an amount that's going to change your life, yeah, you've got to have to have a decent amount. But nobody was born running or sprinting. You got to crawl, you got to jog, you got to walk fast, then you got to run. Okay, you don't just come on out and say, hey, I'm here, let's go sprinting. No, it doesn't work that way. See, everybody starts somewhere. Now, I started about 20, 30 years ago with like $17,000. That was it. Wasn't a lot. But now I have enough. I don't have to work anymore. Okay, so let's take a look at the numbers. I like Walgreens. Great. Let's do a trade and show you what it looks like. All right? So let's do this. Okay, let's get rid of this. Let's change this to a covered call. Now, it's currently at 1160. I'm going to do the 1150s because they just look good. The numbers work. Now, I'm going to do just one contract so you guys have an idea how much one contract costs. How long did it take you to answer your daughter's question? About 3 or 4 days. Daddy, can you teach me what you're doing? Okay. Then I had to really think, what is a trading strategy fit for a 9-year-old? Well, she's not going to lose. Okay. Profits are going to be consistent. All right. Anyway, let's go. All right. So one contract. Then I want to change this where it says limit order. I want to change it to a market order. Now, the reason why, okay, the stock purchase and the option sell, buy the stock, sell the option. Buy the stock, sell the option. Okay, am I here? Anyway, so I want to know what I'm going to make before I do it. Here's the trade. Let's listen. Now, the reason why I have it on market order rather than limit order, a limit order will go onto the computer of the market maker and it will sit there until the market maker is ready to fill it. A market order will fill instantaneously. Now, you might be thinking instantaneously, you might not get a good fill. The order is the exact same time. I'm buying and selling at the exact same time. I already know what my profit is going to be. Because if the market maker posts it, okay, if he posts it, he is required by law to fill it at the market price. Limit order, no. He can fill it whatever he feels like. Market order, if he listed for sale at that price, he's got to fill it. All right, let's take a gander. You ready? So, let's put the confirm and send. Here is the actual order. Okay? Buy one covered call Walgreens WBA 100s. That is the weekly, meaning 31 January 25. The option will expire next Friday. Not this Friday, next Friday, January 31st at 3:59 p.m. Now, options expire on Saturday. However, 3:59 p.m. on Friday afternoon is the last possible trade you can make before the market closes for the weekend. And then it closes and it expires on Saturday afternoon. The computers do all the little math and you'll have all your money to you on Monday. Let's keep on looking. 31 January 25, that's next Friday. The $11.50 call option against the Walgreens stock at the market to open. Now, the option and the stock are intertwined together, so I know exactly what my profit's going to be before I even make the trade, thus allowing me to figure out, is it worth my time and effort? Because remember, I'm looking for a simple, safe, predictable, consistent 1% per week. So here it is. Very first line we're looking at, break-even stock price. Let me bring my cursor up there so you can see it. Right there. It says 11.20. That's the break-even. So anything over 11.20 is going to be a profit. Okay, what is the chart telling me? Well, the chart is telling me either to buy it or not buy it. Well, if it's telling me not to buy it, I wouldn't have gotten to this point. Okay, so if it's telling me to buy it and I'm looking at this, well, currently the stock price is 11.62. So if it closes, hold on. If the stock closes on the 31st of January above 11.20, anything above 11.20 is going to be a profit. Anything, hold on. So WBA wouldn't, honestly, I don't know. So WBA, you wouldn't buy because it's been losing money for 4 years now and decreasing profitability and shutting stores. I think they closed 1,500 stores in October. Okay, hold on a second. I definitely want to answer this question, and I'm going to repeat it in a second. Let me finish up with the example, because this needs attention to this question, and I want to read it to you guys. Hold on a second. So, as I was saying, anything about 11.20 is going to be a profit, okay? But we're looking for it to be 11.50. Well, currently it's 11.62. Okay, the stock can go up. Stocks only move three ways: up, down, or flat, sideways. Okay, so hypothetically, if the stock goes up, I make all my money. Hypothetically, the stock stays the exact same, doesn't move at all, I make my money. The stock can even come down all the way to 11.20. It's 11.62 at the moment. Come all the way down to 11.20, and I'm still making a profit. I think that's a no-brainer. However, let's continue. Now, this current example, maximum profit, $29.50 per contract. Now, remember where I said I want simple, safe, predictable, and consistent. Well, I know exactly what I'm going to make. Okay, $29.50 per contract. I know it doesn't sound like a lot, but as I progress and as I show you the math, you will all understand. It was either I get it or I need to see it again. One or the other. Okay, so I do this over and over and over again, so you guys probably should be able to get it. Because remember, it was created for a 9-year-old. a 9-year-old. I'm going to show you a video of her. And we'll say, okay. All right, anyway, here we go. Now, let's bring up our calculator. Calculator. Here we go, right there. Okay, get out of that. Now, we're going to take the profit, $29.50. Okay, $29.50. And to find our rate of return, our return on our investments, we divide the profit by how much money we have to lay out. Okay. So in this instance, it's 1,121. 1,000. Wait. Okay. 121. Okay, that's better. And 16 cents. Okay. So one contract profits $29.50. It's going to cost me $1,100. That's 2.6% for 1 week. Okay? 2.6% for 1 week. Now, if you can get 2% every single week on a stock that makes sense, well, why not do it? Okay? Now, I've been trading Walgreens all year. It's one of my most profitable companies that I have been trading. Okay? And yes, it is down, and it is at a low of 4-year period. But you're under the assumption that I bought it 4 years ago. No. If I buy it tomorrow at $11.20, I sell somebody the rights to buy it from me at whatever I just did, and it's going to give me 2.6%, and the stock doesn't have to move at all. And if the stock is above $11.50 come next Friday, I'll be out of that position, back into all cash again, and then I can move on to the next one. The idea is, look for a good company. Well, I like Kohl's, I like Walgreens, I like Nordstrom's, I like Macy's. All these companies have consistently made me money. Now, you're thinking that the stock has to go up. No, it doesn't. For me, it just has to stay the same. Okay, even if it goes down, I'm still making the 1% every week. There's hundreds of trades that you can do that consistently give you a safe, predictable strategy or safe, predictable return. So here's the question. You ready? Honestly, I don't know. That's the name of the person who posted the question. So Walgreens, you wouldn't buy because it's been losing money for 4 years now. It's not what I said. Now, I bought Walgreens a whole bunch last year. Okay? And I will probably buy it again. Actually, I do own some Walgreens at the moment. And decreasing profitability and shutting stores, I think they've closed 1,500 stores in October. Okay. So he's probably right on a few things and probably wrong on a few others. But let me address them one at a time. I think net income for Walgreens is negative $10 billion now, so they lost a lot. But don't you say increasing profitability is your requirement. They are losing money year over year. Today, my pet... Okay. All right, so here's the thing. Overall, yeah, the company has gone down over the last 4 years, but there's 8,700 stores worldwide. Now, the last administration did not want to prosecute for theft, so we had more or less a free-for-all for the past 4 years. Come in, take our shit, walk out, we won't do anything about it. As long as it's $900 less, you can steal the shit and not be prosecuted. Yeah, there's a lot of stores that are saying, well, we lost a shitload of money because of the previous administration didn't want to prosecute theft. Okay, fine. Who suffers? We the people, because we have to deal with the ramifications of what some dishonest people have done. Okay, there are people walk into a store, steal a bunch of shit, and leave and not get in trouble because the government doesn't want to do anything about it. The last administration. We'll see what happens this new administration, see what happens. But yes, Walgreens did come out and say that we are going to close some of the stores that have been losing money. It only makes sense. It's practical business sense. But what you're missing is there is, at this moment in time, talks on the table of a private company coming in, taking over Walgreens and taking it private. Okay, nothing wrong with that whatsoever. But you're under the assumption that I'm buying and holding long term. Even if I was, you only make money when you buy low and sell high. And if it's at a 4-year low, well, yeah, that's the time I want to buy it. Also, did you take a look at the book value for Walgreens? The book value for Walgreens is actually more than the current stock price. So it makes more sense to, on Friday, what are your actions you are taking on a position you took Monday? Okay, see, I can't answer that question because we're in Wednesday night. I can't answer the questions of Friday afternoon with the information I possess on Wednesday because I have no idea what's going to happen Thursday and I have no idea what's going to happen Friday. Say Friday is an interesting day and Monday is an interesting day. I do all my buying on a Monday because that's where I get the biggest bang for my buck. Okay, got 5 days, Monday through Friday. The maximum amount of time is Monday morning, 9:30, Friday afternoon at 3:59. That's the maximum amount of time you are going to get on a weekly option because the market opens at 9:30 Monday morning, closes at 4. However, your last trade on a Friday, 3:59 p.m. Okay, you can't trade after 4 o'clock. So, Monday, 9:30, 4 o'clock, 3:59 Friday. That's the maximum amount of time. So where's the stock going to be then? Well, currently, let's get out of here. Let's get out of there. Let's get out of there. Let's change this back. And let's go here. All right. Okay. Currently, this is where we are with Walgreens. Uh-oh. Saturday, Sunday is boring for me. Yeah. Okay. So, that being said, I already own Walgreens, but I bought Walgreens down here in the 950. Now, I pushed it forward and I rolled forward twice. Okay, so the stock is up here, but I still bought it down here. Okay, so I'm profitable for Walgreens. I will let it go, and as the price drops back down here again, and once she turns and goes back up, yeah, I'll jump into it again. But I don't buy something when it's above the 30-day high, which you did. I don't understand why you would do that, but we all have our reasons for doing what we're doing. Okay, you hit a high Friday. Now this profit taking, now it's dropping. Okay, best thing you can possibly do is roll it forward into next week. Let the 60. And I'm not telling you what to do. I'm telling you what I would do. Okay, this is not advice. This is just what I would do in that situation. I would let the 63 expire worthless, or what do you call it? Whichever one you saw, worthless, and then see what comes up next. Okay, let's go on to some more questions. Okay, I always sell Felser stock from 12 noon Central Standard Time, profit Monday to Friday, because Felser stock gap a lot. Okay, never heard of it, but all right. Monchi Crypto Mill. Brother, what do you think about Apple calls 60 days out first swing paper trade? Okay, dude, I don't do Apple. Well, yeah, I do Apple. Let's pull up Apple. Now, normally, Apple doesn't fit because it doesn't have 20 years of dividends. However, Apple is on Warren Buffett's list. So, yeah, I do take a look at it. All right? What do I think about Apple calls 60 days out first swing paper trade? Well, at first glance, here's your high, here's your low. Okay, here's where it was, here's where it is. Look at the movement. Down, up, sideways, up, down. So you're looking for it to turn around right here and start going back up before jumping in. Why you'd get a call is beyond me, because 80% of all options expire. Now, I'm an option seller. I'm not an option buyer. Okay, I want odds and probabilities in my favor. If I buy options, well, my chances of being right is 20%, because 80% of all options expire worthless. If I'm a seller, I'm 80% going to be making money. All right, so let's keep on going. So, hypothetically speaking, last 30 days, okay, here's your last 30 days for Apple. Okay, 30 days ago at 225, jump up to 260, drops all the way down. Yesterday was the 30-day bottom. 30-day bottom. If you think this is going to turn around, go back up, well, yeah, buy your calls. That's not advice. I'm just saying. If that's what you think, wait. I like to wait 2 days to the upside. Now, today was not higher. Okay, it has a higher low, but not a higher high. Okay, so yesterday was higher than today. So, is it an up day? I don't know. Wait until you know for a fact this is the bottom. Now, this looked like a bottom. 2 days to the upside. Okay, 2 days. But nope, third day when you jump in, it pulled back. So no. 2 days to the upside. On the third day, if she's up, that's when I jump in. But that's me. You got to figure out how to decide what's the bottom for you. And it's different for everyone because we're all different. We all look at things differently. We all can look at the exact same thing and we would all describe it differently. Okay, lucky we already took a look at Intel. If you had $10,000 to invest for the next year, what stock would you invest in? Okay, you should say what stocks. I wouldn't put it all into one. Okay, I like diversification. With 10 grand, I'd pick 5. 2, 2, 2, 2, 2. That's 10 grand. Okay, then as each one profited, sell it, jump into another one, same thing. Roll it forward. Can we take a look at RXRX? What the hell for? RXRX. You want me to take a look at RXRX? Alrighty. Interesting. Look at that movement. Okay, down, up, down, sideways, and now it's going up. Well, that's interesting. Well, I've never heard of them. Let's take a look. How consistently profitable are? How many years of increased dividends does this company have? I've never heard of them. So let's go to Yahoo Finance. Let's take a look at historical performance of dividends and put in RXRX. Imagine that. There are no dividends in the selected time period. What does that mean? Remember I said I have 2 criteria and only 2. Consistent profitability, weekly options. Well, this one has weekly options, but it has no dividends. So my question would be, if you come to a dividend investing show, why would you ask me to take a look at a stock that has no dividends? That kind of boggles my mind. Okay? So RXRX, no. Sorry. Okay, the reason why I want a dividend, here we go. Let's go over to here. Let's go over to here. Let's go over to here. And let's do this thingy right here. Okay. You see this calendar behind me? This is an EX dividend calendar. Okay? You will not find stocks that do not have dividends on this calendar. Reason being, I don't do stocks unless they have a dividend. And I'm about to tell you, in Intel comp 6-month movement, we can still get ready to see the movement. If not, why? All right, we already did Intel. Okay, we're on to the next subject. Terribly sorry. Okay? Ask that question again tomorrow because we already looked at Intel today. All right, so EX dividend calendar. There's 4 dates to remember when it comes to any dividend stock. Date number 1, the announcement date. Hey, my name is James. Here is the information you're looking for. My company did this amount of money. This is the dividend we're going to be paying out on this date. It's the announcement date. Date number 1, the announcement date. Who the company is, what the dividend is, when they're paying it, all that kind of information. Date number 2, EX dividend date. That is the last day the stock trades before the dividend is paid out. If you want to collect the dividend, see these little green dots? Those are the EX dividend dates. So if you want to collect the dividend on CVS, right here, you have to buy the stock before this date. The 22nd, the 21st, the 8th, the 2nd, the 31st, the 7th, the 9th, any day before that date in order to qualify to capture the dividend. Date number 3, the date of record. Okay, right? This simplifies it. Whoever owns the stock on the date of record is entitled to the dividend. Hey, check it out. My brother John is watching. Johnny boy, what's happening? Uh-oh. How's it going, John? Nice to see you. Yeah, brother. All right, so whoever owns the stock on the date of record is entitled to the dividend. Plain and simple. Date number 4, the payment date. When do you receive your payment? That's it. 4 dates. Announcement date, EX date, date of record, and payment date. If you want the dividend, you got to buy it before this date. So why are dividends important? Just besides all that crap. Just before the EX date, the stock has a tendency to go up in value. So if you know when a stock goes up in value, that is important information. But it's only valuable if you know what to do with that information. So, CVS. If I want to do a trade on CVS, I will do it 2 weeks before this date. Okay? 1 week, 2 weeks on a Monday. Okay? If I like CVS, 2 weeks on a Monday. So I would be buying it on the 6th. Okay? That way I have all this week here to make my 1%. If I don't make my 1% here, okay, if it doesn't hit my target, I do it again here. If it doesn't hit my target, I do it again here. And what did I just collect? 1%, 1%, 1%, and a dividend. That's 3% and the dividend if it doesn't hit my target. And guess what? If it doesn't hit my target on this Friday, I do it again. And then I collect another premium. And I do it again. And I collect another premium. And I keep collecting premiums until it hits my target. Rule number 1, never buy a stock you don't understand. If you don't want to buy it, you don't want to own it, don't buy it. Do the numbers make sense? What am I buying for? Let me jump over that screen. Okay? What am I buying it for? What strike price is the closest? What is it? Holy shit. 45 cents on a $7 stock? That's a nice premium. It is. Because it's just shy of 7%. It's close to 6%. So I could get a 6% rate of return for 1 week on this stock. But here's the thing. I know nothing at all about this company. They don't have dividends. If I'm wrong and the stock goes down, what am I getting next year? Nothing, because they don't share their profits. Now let's say IBM, AT&T, Verizon, Microsoft, Dell, Occidental Petroleum, any one of those companies on my personal list. Well, if and when, it's not an if, it's when the stocks go down, well, every year I'm getting higher and higher and higher dividends because that's my criteria. I only buy stocks that consistently increase their profitability. Why would I jump into a company that I can't plan? Stocks only move for 2 reasons. A known reason or an unknown reason. Let me explain. An unknown reason is a lawsuit that comes out of nowhere. Okay, Apple had a lawsuit last year. Billions of dollars they had to pay out. The stock dropped. Okay, ExxonMobil, when Valdez crashed in the Northwest, they had a big, huge issue. Their stock dropped. Nobody knew that was going to happen. British Petroleum, they sprung a leak in the Gulf. Their stock dropped. Nobody knew that was coming. Earthquakes, hurricanes, tornadoes, natural disasters. We don't know they're coming. Those are unknown events. You cannot plan for those. Okay, you can only react to them. Yeah, you can do that. Or you can do a known event. Well, what's a known event? Earnings reports. They come out every 90 days. Okay, dividends, they come out every 90 days. You know they're coming. That's a known event. Seasonality. We know when winter's coming. We know when spring, summer, fall. We know when these days are happening. Well, how does the stock react to Christmas? That's a seasonality. Well, let's take a look at the seasonality chart because they actually do have one. Okay, here we go. Okay, this is what this stock does normally. Okay, the red line represents 10 years average movement. Well, what does it usually do in January? It drops like a rock. What does it do in February? It shoots up nicely. What does it do at the end of February? Usually drops like a rock all the way into May. Definitely don't want to buy it here because look at she's sinking, sinking, sinking. Now, does that do it every year? No. This just so happens to be the average over the last 10 years. Okay? The blue line, this right here, that represents this year. Not much happening because we're only into what, week 3 of this year? But look, the seasonality. Yeah, I'm not buying this thing now. Look, she's going to drop. In 2 weeks, she'll shoot up. Maybe I might think about it then. But this company has no dividends, so I would never, ever look at this. It's just basically a waste of my time. So if you're going to ask me to take a look at something, make sure it has dividends because I want a portion of the profit. Here's the funny thing. When you buy a share, you become part owner of that company. As an owner, you are entitled to your share of the profits. Now, companies with dividends, they will give you a share of the profits, either cash, stocks, or some form of payment. But a non-dividend paying stock, they take those profits, put it back into the company, and then hypothetically, the stock value increases. I say hypothetically because it doesn't always happen that way. Okay, so let's keep on moving on. That's my thoughts on RX. Never heard of them. I don't buy stuff I've never heard of. It just doesn't make sense to me. Isn't that weird? All right, let's keep on moving. Ooh, how about Macy's? Fly Goofy. I love Macy's. I have no questions at all on YouTube. Wow. Can somebody do me a favor? Go to YouTube and see if the YouTube channel, because this screen right here should be live on YouTube. Just a screen, 2 live on YouTube. One, me standing in front of the screen, and one, just the screen. Okay, can somebody check that and see if they're both running? Okay, because I have no questions at all from YouTube, and that's kind of odd. Okay, we already looked at Apple. Fly Goofy, we're going to take a look at Macy's right now because Macy's is like a perfect opportunity in my humble opinion. I am seeing you on standing. Okay, it's on. Thank you, Angel. Okay, Macy's. I love Macy's. Wait a second. I said I was going to do this, so let's actually do this right now. Okay. I can't find just the screen. All right, John, it should be there. Let's take a quick gander. All right, we're going to YouTube channel. Yeah, there it is right there. Okay, 2 lives, this one and this one. Okay, me standing in front of it and just the screen. Yeah, so they're both live. All right, now what I wanted to show you is the little princess. Remember I told you I created this for my 9-year-old daughter. YouTube screen only, also working. I'm listening and learning. Thank you, thank you, thank you. What about Verizon? We looked at Verizon last night. Hold up. Here's the princess right here. This is my favorite video.
Which my dad didn't let me calling it that, but I do. Hi, I'm JC, and as you being part of my internet website called Thingy, which my dad didn't let me calling it that, but I do.
Look at this, we're almost the same size.
Being part of that, we're going to be getting weekly lists of stocks
Okay.
trading, and
So that's JC, my daughter.
of stocks that you can choose from that have
And here's me right there. I laugh every time I see that. I think it's funny. Now, the reason why I showed you that, the reason why I showed you that, I created this trading strategy for her when she was 9. Okay? Now, in that video, she was 11. So we had been trading for 3 years at that time. Okay? Now, it had to be simple, safe, predictable, consistent, and no way for her to lose. So what you're seeing, what I'm showing, what I am teaching is the same strategy, because you can go back and you can watch those videos. There's like 700 or 800 videos that you can watch anytime you want. See, I'm doing the exact same thing I did 10, 15 years ago. Exact same thing. I look at the 1-year chart, I look at the 90-day chart, I look at the 30-day chart. I look at where is it, where does it look like it's going? Is it the right time to buy? Because the chart will tell you. So we're looking at Macy's. Now, I'm going to show you that I like Macy's, and this is what I'm looking for. Because yes, I bought some Macy's yesterday. And I'll tell you why. Now, here's the high, here's the low, here's where it was, here's where it is. You take your little finger, okay, up, down, sideways, up, down. Now it's going back up again. That's the 1-year chart. Great. It looks okay. It's not at the very bottom. It's not at the very top. Great. It's somewhere in between. Lovely. Now let's look at the numbers. Because if I can't make 1% every single week, it's no thank you. I'll take a look at another one. $14.62. Okay, right off the top of your head, you should know the closest strike price will be $14.50 or $15. Either one. Pick either one. The $14.50 is the safer trade because the stock doesn't have to do anything. Because right now it's at $14.62. $14.50 is less than what I'm buying it for. How can I possibly make money selling less than what I paid for it? Hold on, let me explain. The current price, $14.62. If I sell it to someone by next Friday at $14.50, I'm losing 12 cents, right? Okay, you can say right, and then you can say, James, what the hell are you thinking? Hold on, we're going to explain that in a minute. The $14.50 is selling for 26 cents a share to 42 cents a share. Well, I'm only looking for 1 cent, 1%. 1% of $14.50 is 15 cents. Okay? So if I take the 12 cents off of this, now I'm walking away with 14 cents to 30 cents. Okay, I'm still making my 1%. That's the safer trade. Because the stock doesn't have to do a damn thing. And even if the stock comes down, I'm still making money. Well, that kind of makes sense, right? 14.62, the 15s is going for 15 to 19. Okay, both of them are giving over 1%. 14.50 safer, 15's more profitable. Okay, now let's take a look at the chart because the numbers work. Remember, what does the chart say? What do the numbers is? Okay, so let's go. Year ago, 18. Shoots up to 22, drops all the way down to 14, shoots up to 18, drops down to 13. Now we're sitting at 14.60. Let's take a look at the 90-day, because right now the 1 year looks great. So the 90-day, when do you collect the premium when the strike price? Okay, no, you collect the premium when you sell it. So if tomorrow morning I buy a stock and I sell the option, I get that option premium that day. It gets credited right to my account. I actually have a credit card and a debit card attached to my trading account. Anytime I need money, Monday, I get a big fat chunk because I sell all the options Monday morning. All that money goes into my account and I can spend it on Tuesday. Okay? Now, the 90-day. High, low, where was it? Where is it? What's the direction? Sideways, up, down, up, down, up. Not that difficult. Please try not to complicate things. It's not that difficult. If you have a hard time with it, get a grandchild, get a niece, get a nephew. Say, hey, what is this thing doing? Down, up, down, up, down, up. Don't make it more complicated than it needs to be. Okay? The last 30 days. Because the last 30 days will give me a good idea of what's going to happen next week. And here, you should take one look at it and say, I know where it's going. It should be that obvious. Seriously, it should be. Look, 30 days ago, 1650. Shoots up to 18, drops down to here. Look at this. 1, 2, 3, 4 days. 4 days to the upside. What does it look like? Odds and probabilities. 30-day high, drops down, back up again. It's not that difficult. Not G-pop. Anyway, so when I said I jumped in first thing Monday, here's why. 30-day high, it dropped down. The bottom was on last Wednesday. Okay, this last Wednesday. Thursday higher, Friday higher. 2 days to the upside. I waited for Monday morning. First thing Monday morning, this thing goes higher. That's my cue to jump in. So I did. I jumped in on Monday. There's still opportunity to jump in tomorrow if I wanted to do it again. But like I say, 98% of all my money is tied up Monday. Tuesday, Wednesday, Thursday, Friday, I got nothing but my credit cards to float around in. But I don't really need it because I've been doing this long enough. You get used to money coming in on Monday, pay all your bills, and then money coming in on Monday, pay all your bills, money coming in on Monday. Anyway, let's keep on going. So, that was my cue right there. Okay? Now, I do it every Monday because that's when I get biggest bang for my buck. So, what does Macy's usually do this time of year? Okay, really not that difficult to see that right there. See it? Another week. I will let it go this week. Here's where we are. The Friday's the 31st. Okay, right about here. Okay, the seasonality says she's going up right here. So fine. If I'm out this week, great. I've made my money and I move on to the next one. Then I won't take a look at Macy's again for a couple of weeks because I don't want to be involved in this crap. Where is it? Right there. See that? Okay, I don't have anything to do with that. I'll take a look at Macy's again, probably in late September, because I want to take advantage of that. Now that's how a stock normally moves year after year after year. Okay, what is it doing? My next buying opportunity from Macy's would probably be somewhere in May. Take advantage of this, or maybe take advantage of this. But this right here, no thanks. Everything is there for you to see. You just need someone to show you A, B, C, D, so on and so forth. And hopefully that's what you're learning here. Now, for you guys, in case you didn't know, what you're looking at this moment in time is being recorded. So if you want, at any point in time, you can go back to YouTube and watch this whole thing over again. Now, when you do, you have two opportunities. One, me standing in front of the screen, and two, just the screen by itself, me talking in the background with a little picture of me down there. Okay, so it's being broadcast 7 different directions, and it's being recorded. Okay, so the recording is going to be available on YouTube for however long. All right, so let's keep on going. Okay, we already did Apple. All right. Okay, JRG, RXRX, I think it's getting close to breaking out 14. I really don't care. No dividends, no thank you. Sorry, JR. Paul, what's happening? Covered, long, spread, short, uncovered. Which should I apply for? You want to do the simplest and easiest. It's level 1. That's it, just level 1. That's for covered calls only at this moment in time, Paul. That message is specifically for Paul. When I say drop your number, I will give you a call. Okay, Paul dropped his number. I gave him a call. We had a nice chat. Okay, to begin with, Paul, simple, safe, predictable. Now, at some point, I will teach you all those strategies. Okay, because Paul is going to be one of the morning trading group. Now, I do have a morning trading group. It is a paid service. I try not to sell anything here. I'm not selling anything to anybody. But as a paid member, I will be teaching the other strategies. I only teach one strategy here for free. If 50% per year is not enough for you, I cannot help you out. Because the trading strategy here that I taught my 9-year-old, 1% a week, is over 50% per year. That's not enough for you, I cannot help you. Okay? So let's keep on going. Did you get into CTAS last month? No, I did not. What's your take on SCHD? Yeah, okay. Olaf, I already picked on somebody today, and I don't want to pick on you because you're new, because I remember that name stands out, Olaf. No. When I say seriously, dude, check out the numbers. What do I mean by check out the numbers? Go to YouTube, Yahoo Finance. Okay. Put in SCHD and take a look at the numbers. All right. Okay. Charles Schwab U.S. Dividend Equity Fund. Dividends only. Well, number one, they've only had dividends since 2012. 13 years of dividends doesn't fit. But it gets worse. Look at the numbers. Up, down, up, down, up, down. No consistency whatsoever. But hold on. Take a look at here. Oops. The summary. Come on. Here's the summary right here. SCHD is paying 3.64%. It boggles my mind when people ask me, is this a good company to buy? When I say, have you looked at the numbers? Most likely you don't look at the numbers because you're looking for my opinion. Well, my opinion doesn't mean anything. You've got to figure out what's right for you. When I tell you 20 years of consistent profitability and you give me SCHD, I'm thinking to myself, this guy's not listening to what I say. If it doesn't have 2 decades, 20 years of profitability, it's going to be a no. And look at what paying 3.64%. What makes you think 3.46% is a good investment? All right, anyway, let's keep on going. Yeah, Fly Goofy, Macy's 1 week out looks good. Yeah, it does. That's why I bought it. What about SoFi? Dude, same thing. DJLP662. When I say the same thing I just told him, look at the numbers. How consistently have they increased their dividends? How often? Now, like I said, there's 9,834 companies. Why are you so fascinated with this one that's not consistently profitable? It's a simple answer. Is this company consistently profitable? Have they increased their dividends for more than 2 decades? No. Well, then why are we looking at it? It's actually that simple. Okay? If you're looking at dresses, size 14, and you only fit into a 12, why are you looking? It doesn't make sense. If it doesn't fit, why are you looking at it? Okay, JRG. RX thoughts on it. I'm thinking of closed break. Okay, I already told you, dude, RX is a no. SoFi. Okay, dude, DJLP, you really want my opinion? You just heard me basically yell at other people because they're not reading the information. I'm assuming you're not paying attention either, because I know what SoFi is offering, yet you're asking me to look at it anyway. Okay, SoFi is a no. If the numbers don't work, why are we looking at it? Why are you looking at it if you've already looked at the numbers? If you looked at the numbers, if you've seen how profitable they are, you wouldn't be asking my opinion. Because my opinion, right to the point. See, I'm a Gen Xer. Really, honestly, don't care about your feelings. I don't. There is no safe place here. Okay? There will be no participation trophies. Okay? Terribly sorry. Hate to burst your bubble. If it doesn't fit, it's going to be no. It's just a waste of our time. We're looking for simple, safe, predictable, consistent ways for 1% a week. SoFi doesn't fit. What's your take on XRP? Like another person who doesn't listen. Can I start with 500? Wanda, yes, you can. Oh, John, too much attitude for stock page, bud. Terribly sorry, dude. Thoughts on Intel? We already did on Intel. Alice is laughing. She thinks that's funny. Dave, seriously, TSLY? Oh, my goodness. All right, for the fun of it. We haven't picked on Dave yet. Let's go back here. TSLY. Okay, first and foremost, first, TSLY monthly. Do you see these right here? February, March, May, August. Those are months. Those are not weeks. Okay? No. TSLY, no, doesn't fit. Altria. Ooh, who's that? Diego wants to take a look at Altria. I think I know it's a no, but want to see his thoughts. Okay. Altria. Oh, Cisco. Young lady wants to take a look at Cisco. CSCO. Sorry. CSCO is Cisco. No. CSCO. Cisco Systems. Okay. Now, don't get me wrong. I like Cisco. It does fit the category. However, it's at the high of the year. Okay? Now, I like Cisco. I do. Seriously, I do. But why would I want to buy it at the high of the year? Okay, so if I zoom in, the last 30 days, which should be right about here, okay, here's the last 30 days. 30 days ago was the bottom, right at 58. Now from 58 to 61, that's only $3.5. $3.5, that's 5%. That's only a 5% increase. Not a whole heck of a lot, but it is what it is. But it's at the high. Do you really think it's going to go higher? It might, but ask yourself a question. Okay? Do you want to buy it here, or will you prefer to buy it down here? Because you make most of your money buying low and selling high. I just don't hear a lot of people saying, hey, Cisco's at the high of the year. Let's buy it and wait for it to go higher. It doesn't make sense to me. But that's me. I have been wrong once or twice. I had no problem admitting I'm wrong. But me personally, I like the company, but I wouldn't like it. I wouldn't like to buy it at the high of the year. Sorry. Diego wants to look at Altria. Okay, so Altria, again, is a company. I actually own some Altria. Okay, so I like Altria. But look at the numbers. If you're thinking of jumping into it, okay, it doesn't really look that favorable. Here's the high of the year. Here's the low of the year. Look what it did. Up and now down. Simply. You want to be more complicated? Well, it's up, down, up, down, up, down, up, down, up, down, blah, blah, blah. But simplicity, it's up, then down. Okay, Sweet Jones, we'll take a look at Verizon next, okay? After this one. So, here's my thoughts on Altria. Okay, here's a high over here at 58. She drops down to here. Here's a good time to buy right there. But she went up and then she pulled back again. Not quite at the bottom. Keep watching. Next week, or sometime this week, it might hit the bottom. See, here's your last 30 days. Okay, here's the last 30 days right now. Down, up, down, up, down. So it's going to find a bottom within the next few days. Once it does, and she heads back up, that's the time to jump in. Just keep your eye on it. Tomorrow, the next day, maybe. Alice. Okay, we'll look at Pfizer in a minute, Alice. I promised somebody will take a look at Verizon. Oh, now, quick look. High, low, where was it? Where is it? What's the direction? Up, down, sideways, up, down, up. It's turning right here. Okay, so it looks like a good opportunity here on the 1 year chart. Now, as we get closer, it will change, but at this moment in time, let's take a look at the numbers. Okay, the chart, the 1 year chart looked okay. What am I buying it for? 39.25. Well, 39.25, look at the 39, it's 79. Well, that's a yes. 39.50, well, that's a yes too. So either one of these works out great. All right, now, the numbers work. Great, wonderful. Now let's go back to the chart. Is it the right time to buy? You can't really tell on a 1 year chart. So we close it up a little bit and we take a look at the 90 day. Okay, a year ago we were at 39. We topped off at 45.32. That was in the end of September. So here's our 90 days right here. Here's the last 3 months. And it's not that difficult. High, low, where was it? Where is it? What's the direction? Down, up, down, up. Simple, right? Don't make it complicated. It looks good, doesn't it? Because look at this. This looks like it's a great opportunity. It comes down, now it's going back up again. Gaming cheeks, what's happening? So let's zoom into the 30-day and see what that looks like. 30-day would be right about there. Awesome. That is an awesome looking chart, in my opinion. Okay, $40, jumps up to 40.50, drop down here to 37.50, and look at this, nice. It still has a long way to go before it's back up at the high, which is here. Okay, great opportunity. However, what does it normally do? For that, we take a look at the seasonality chart. Okay, here's January and February. Okay, January, February. Well, basically, she's going to go sideways for about 3 weeks, and then she's going to slowly go down. So, yeah, maybe for a week or two. Now, when I say I want to jump in for a week or two, and then jump on out and find something else. Well, because I like the stock, don't get me wrong. Do I want to buy it and hold it for the rest of my life? Well, I wouldn't mind, because they do increase their dividends every year. Okay, that part's good. And I can get an option, weekly option, every single week and bring in cash flow. Well, currently, right now, 39.24, the 39 is going for 79. Well, that's over 1%. The 39.50 is going for 55. Now, the 39.50 will be more profitable, but the 39 would be safer. Means I'll be in and out in the week. Well, that's what I'm looking for. So here's the balancing act. This is what you got to try. Okay, if I buy it tomorrow morning at the current price and I sell the 39, as long as she stays above 39 by Friday, I will make over 1%, and then I will be back into cash the following Monday, and I can choose something else. Well, we've seen the seasonality. She's going to go sideways for about 2 weeks, and then she's going to go down. Well, I only want to be in it for a week. I'm in it for a week. I get my percentage. I get back out. I have all my cash back to me. What's wrong with that? I think that's genius, brilliant. What does the stock have to do? Absolutely nothing. Well, it's got to not go down. But if you remember taking a look at the chart, what is the chart telling us? The chart's telling us 2 weeks ago was the high. The bottom, 3 weeks ago was the high, 2 weeks ago was the low. Now she's steadily going up nice and slowly. Well, great. That works for me. Worst case scenario, I will hold on to it because I like Verizon. And I have no problem with Verizon. And I will sell a covered call every single Friday, collect a premium every single Friday, collect a dividend every 90 days until it hits my target. What's my target? The price I just paid for it, 39. As long as she stays above 39, I'll have all my money back, make my percentage, and then move on to the next one. Adults have a tendency to make this more complicated than it needs to be. That's why it was created for a 9-year-old. And trust me, she did just fine. All right, here we go. Next on the list. Holy cow, we're at 11. Now, at 11:15, I'm going to stop looking at stocks and just answer questions because I got a whole bunch of questions here waiting. Okay, RGTI, we looked at it a couple of days ago. It's a no. Pfizer, Alice wants to take a look at Pfizer. PFE. All right, kiddo, take a look at Pfizer. Okay, up, down, okay? Not this week, kiddo. Wait for it to get a little lower before she turns around and goes back up. RGTI, didn't we take a look at that one? RGTI. Okay, a couple of months ago, this thing's at $1. Okay? Seriously, look at the chart. It's at $1. Now, you can honestly tell me that this thing has 20 years of increased dividends being at $1? Yeah, no. Sorry, dude. Sorry, John. Okay, RGTI. Joe, thoughts on mobile or Walmart? Okay, XOM. No. See, she shot up, now she's pulling back. No. Walmart, WMT. Ooh, now that looks interesting. Look at it. There's the high, she pulled back, now she's going back up again. No. Sorry, last 30 days. 30 days ago, today. No. JEPQ, Aiden, seriously, no. Okay, we already looked at Cisco, kiddo. Alcoa, Bo wants to look at Alcoa. Okay, Bo, check this out. 30 days ago, we're right here. Down, up, here's the high. Now she's coming back down again. Actually, it's that simple. I missed a whole bunch of questions. Let's go back. Wow, all these questions I missed. Okay, XRP, no. Harley Davidson, we already looked at Harley Davidson. Wade, what's the name of the website you're using? Look at the data. Okay, the two websites I have shown you so far. This is Think or Swim. It's not a website, it's a trading platform through Charles Schwab. Okay, there's a bunch of different trading companies. You got Charles Schwab, you got Fidelity, you got Robinhood, you got Acorn, you got Webull, you got Interactive Brokers. This, Charles Schwab, Think or Swim. Okay. The other website is Yahoo Finance. That's right, the financial information. Okay, what's the high of the year? What's the low of the year? The 52-week range, blah, 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 the dividends, all that kind of stuff. Hello, sir. Good morning. Fashal Mir. How are you today? Okay, Jesse. If you had 700 Apple stock, would you hold or trade some to other stocks? Long-term hold? If so, what? Okay, Jesse, great question. Now, Jesse, you're new here. My suggestion, this is just a suggestion, don't do anything. Keep coming back. When you understand the concept, see if it makes sense. That's the number one question I ask everybody to come away with. Does it make sense? Because some people will get it. Okay, you can take somebody to the seashore as the sun is rising and they just won't get it. They won't see it. Okay, or you can take them to a beautiful sunset and they just don't get it. They just don't see it. Okay, it's not right, it's not wrong, it just is. Where am I from? I'm from the Boston area. Okay, what's the name of the website? We already did that one. Wade, just read the chat. Okay, got that. You've been told about 10 times. You feed looks better in it. Okay. Holy bad guys. Jesse Rock, this strategy is to be in and out in a week, so holding is not the goal. Thank you very much. Opinion on yield max funds? Hell no. Okay, Surge FX. I always tell everybody, do your research. Check the numbers. Numbers do not lie. Sales brochures will lie to you. Sales brokers will lie to you. Salesmen will lie to you. But the numbers will not lie. What was their dividend last quarter? What was the dividend the quarter before? What was the dividend before that? Go all the way back to the very first dividend they ever paid out. Is it increasing every single year? Are you getting a good return every single year? It's either a yes or it's a no. There's only two sides to a coin. Well, there's actually three, heads, tails, and I've never ever, I've heard of it, but I've never seen a coin landing on its edge. Okay, dude, I don't do cryptocurrency, all right? Nike, we looked at Nike yesterday. We don't have any more time for that because I got too many questions to answer. I want to learn how to day trade. Jesse, you're in the wrong place. I don't day trade. MSTY, Mikey, I'm going to tell you the same thing I tell everyone else. Check the numbers. Check the statistics. Look at what the current yield is. What kind of dividend increases do they do on a consistent basis? Do they have weekly options or not? Angel One, how many websites do you subscribe to? I know you use Thinkorswim. I use Thinkorswim and Robinhood. Those are the only two trading platforms I have. I don't subscribe to anything. Well, wait a second. I subscribe to Zoom because I use Zoom as a platform in which to interact with people live. That's the only thing I have a subscription to. Well, besides my phone. Don't. Okay, let's keep on keeping on. What's the name of the website? We already did that one. I see it. Thanks, Paul. YouTube looks fine. Thank you. Thinkorswim. KHC. Ooh, Gabe wants to look at Kraft Heinz. Now, Kraft Heinz, don't get me wrong, they've been in business for over 100 years. They are dividend king. They have increased consistently for more than 5 decades. Okay? Now, funny thing is, I worked at the Sarasota Yacht Club 20, 30 years ago. Okay, no, sorry. The Zoom classes is a paid service. So to be a live Zoom while I trade, yeah, you got to pay for that one. I don't try to sell anything here, so I'm not going to try selling anything. But if you want it, it's up in the bio. You can find it up there. KHC. Yeah, I worked at the Sarasota Yacht Club about 20, 30 years ago, and I actually met Mrs. Hines. I meant for stock trading. I don't know what you mean by there, Angel. Wait, it's not a website. Okay. All right. Great job. Blah, 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 blah. Okay, Capital Growth. Join Capital Growth Partners. I have no idea what that means. And why would I join Capital Growth Partners? Can you confirm that they pay over 50% a year? Probably not. Wade, you're shooting for what percentage per month? Hold on. You skipped my question. Sweet Jones, what was that? Okay, Sweet Jones, ask it again. Okay, because you're here all the time, and I don't want to neglect you, so ask me it again. I'll look at it right now. Ray Waddell, you're shooting for what percentage per month? All in what percentage exactly? All right, Ray Waddell, 1% per week. Now, some weeks have 4. Some months have 4, some months have 5. So it's a weekly thing. It's not monthly, it's weekly. Apple One, can you share the price for the morning group? If you don't want to share the same membership, blah, 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 why do you prefer to buy stocks under $300? Oh, simple. Okay, here's it for you. You ready? Let's say, hypothetically speaking, I have $30,000, right? Now, with $30,000, I can get $30,000 of a stock at like 100 shares at $300 a share. I can do one contract. That give me 1%. Okay. Or how much would it be? Please look at my question. Oh, yeah. The morning trading group is $100 a month. That's 5 times a week. Monday, Tuesday, Wednesday, Thursday, 9 a.m. Eastern Standard Time. The stock market opens up at 9:30. We want to be in a half hour before the market opens. Friday, 2:30 p.m. We want to be in an hour and a half before the market closes to make sure everybody in the trading group doesn't lose any money. That's my main focus. I want to make sure any one of my students does not lose. provided you don't make a mistake, hit the wrong button. Nothing I can do about that. Okay? That's $100 a month. Okay? The reason it's $100 a month? Those who pay attention. Those who pay more attention. It's not the money. It's the fact that you're interested and committed to your personal finance. It's a commitment you make to yourself. It's not that I need the money. I just want to make sure you're committed to your outcome. Thank you, Angel. All right, so let's keep on going. So Ray, again, 1% per week. Are you collecting dividends on Macy's this month? I would prefer not to. The question is, am I collecting dividends on Macy's this month? My answer, I prefer not to. The reason I preferred not to, because as soon as they pay dividends, the stocks have a tendency to go down. So I really like to get in before the dividend, get my 1%, and then wait until after the dividend is paid. Because after it goes down, she turns around and goes back up again. It's like, think about it. Think of it as a river. See how it flows? Okay, you definitely don't want to go against the current. You don't want to go against the trend. It's trending down. It's trending up. It's not that difficult to understand. You bought after the EX date. Okay. That's not included his win. Okay, that's not including his win side. Okay, Ray, I have no idea what that means, but okay. Hey, Mr. X-Billionaire, how are you doing today? Threading the needle, Macy's dividend is March. Okay, got that. $5,000 investment, what are you investing in? Okay, if I get $5,000 to invest, it's $1,000, $1,000, $1,000, $1,000. I will look up for whatever company I'm looking at if the timing is right. Now remember, I look at about 300 different companies. If you take a look at the calendar, okay, these are the companies that have 25 years or more of increased dividends. If, by chance, hypothetically, just go with the flow here for a second, got $5,000, okay? You find out which one, 5 of these, pick 5, okay? You look at each one, is the timing right? Great. 1,000, 1,000, 1,000, 1,000, 1,000, there's your $5,000. Hits its target, great. What's the next ones? Well, look, Hormel, AbbVie, Abbott Labs, General Dynamics. Pick one. As you sell one, pick another one. As you sell one, pick another one. As you sell one, pick another one. The stocks consistently roll one after another. There's 13 weeks in every quarter, 4 weeks in a year, and 4 quarters in a year. January, February, and March, first quarter. April, May, June, second quarter. June, July, August, September, third quarter. October, November, December, fourth quarter. 4 quarters, each quarter has 13 weeks. We are currently, at this moment in time, in week number 4. Week 1, week 2, week 3, week 4. Here's where we are now, week 4 of the first quarter. Interesting thing, week 4 of the first quarter looks the exact same as week 4 of the second quarter, which coincidentally looks the exact same as week 4 of the third quarter. And would you believe it? Week 4 of the fourth quarter looks the exact same. And then what happens? We go into next year, and then 4th week of the first quarter, next year is going to look the exact same as this, because these companies are over 20 years old and they consistently pay dividends every single year. Okay, so Kay Streeter, I'm assuming, don't get insulted by this, but Kay Streeter, I'm assuming you were not paying attention when I told you SCHD pays an average of 3.6% per year. Their dividends are not consistently increasing. They are not 20 years old. They do not fit. It's not that difficult. 2 decades of increased profits and weekly options. It's simple. 2 decades, 20 years of increased profits and weekly options. Other than that, it's a no. Why do you get your Monday not on Friday? Okay, Neil, I have no idea what you mean by that. Okay, you have to be more explicit. Why do you get your Monday and not on Friday? You got to explain that better. All right, Mr. X Billion, hello. Is this real or a recording? Well, that's an interesting question. Isn't it weird how I answered that question? Hello, is this real or a recording? Well, today, let me think. 11/27, January 22nd, 2025. That is today. That is live. Now, the next time you hear this or watch this, it will be a recording. But at this moment in time, January 22nd, 2025, it is live. Angel thinks that's funny. Yeah, and it's kind of funny. Because see, here's the thing. There's so many people here, so many different channels. I can't get to every single question as you ask them. So I have to stop the questions and answer them one at a time. And yeah, you'll ask a question, 15 minutes will go by before I get to your question. It's not that I'm ignoring you, it's just that you are not the only one on the dance floor. Okay, hello, what's your thought on YETH? Never heard of it. Love your sense of humor. Thank you, Angel. All right, JC80853, Realty. I'm going to ask you the same thing. Have you checked the numbers? Because I know for a fact Realty is a monthly optionable stock, and I believe they pay 10 or 11% per year. Not bad, but not close to 50% per year. So Realty does not fit. New to this stock game, there's a dividend stock payout weekly, thought monthly or quarterly. Okay, so user 438832068198. Okay, it would have been easier if your parents just named you Steve. Okay, to answer your question, I don't know of any company that has weekly dividends. Okay, you're reading the title incorrectly. It says dividend investing for weekly cash flow. How X is looking this week? Ooh, Ludwin. I like U.S. Steel. Now, Ludwin, unfortunately, it's 11:29, and I got a bunch of questions to finish up. So if you want to ask me that question tomorrow night, you'll probably get a better answer. But right now, I'm just finishing the questions. Okay? So, user 4388, blah, 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 whatever. Okay? No company I know of pays out dividends on a weekly basis. I'm looking for companies that have weekly stock options. Now, a dividend stock company that has consistently increased its dividends for more than 2 decades with weekly options. That is your dividend investing for weekly cash flow. All right. Yes, I learned something. That's what I thought too. You're welcome. Now, I'd love to call you by your first name, but I can't read that. Terribly sorry. Oracle, new to trading the numbers. Okay, Bex, I love Oracle. Really, I do. However, it's 11:30. I'm usually done at 11:30. The last 15 minutes of every day, I answer just questions. I don't look at anything. So if you want to take a look at Oracle, I'm here again tomorrow night at 9 until 11:30. So if you want to ask me tomorrow night, great. Won't get to it tonight. Holy bad guys. Sweet Jones. Holy bad guys. No weekly dividends. He sold weekly options cash flow. There you go. Zach, Dollar General. Love Dollar General. I actually have some. KG Weddy. Queddy? All right. Time frame. 2 words does not consist of a whole thought. So I'm not quite sure what do you mean when you say time frame question mark. Thoughts on Bito? Not even going to answer that question. Exxon Mobil seems perfect. It could. I don't know. We're a little bit late. DH, Abbott Labs, love it. New to this, starting tips. Andy, my starting tip is take your time, practice. Do not jump into anything you do not completely understand. Okay, the stock market has been around for over 400 years. You may think you miss an opportunity. You will miss a lot of opportunities. They come every single day. If you miss one this week, there'll be one next week. If you miss that one, there'll be one the following week. When I first started, I was extremely apprehensive, thinking I was missing good trades. And I did. I missed a lot of good trades. But you can't get all of them. 86, dude, it's 11:31 and you're just getting here? Holy bad guys. TikTok Monsieur, only 1 year of dividends. Yeah, that ain't going to work. BP Banjar, how about socks? Oh, hell no. Okay, so when I ask people, before you take a look at any stock, do yourself a favor. Do yourself a favor. Read all the information on it. If you take a look at SOXI, your phone number has now being used for iMessage. Okay, fine, whatever. Device added to your account. Okay, that works too. Alrighty, that works too. Interesting having all the phones linked together. When you get a message on one, you get it on all of them. All right, as I was saying. Oh, SOXI. Take a look at all the numbers. How consistently profitable are they? How many years of consistent profitability does that company have? Now remember, there's 9,834 different companies available. Why are you fixated on SOXI? Is it consistently profitable? Are they giving out enough money every year to make it worth your while? I cannot tell you what is right for you, but I do know I have looked at SOXI plenty of times. It's no for me. Why you look at Melania next? No, George, I have no idea what Melania is. Which one? He's looking at Verizon. We're looking at Verizon. God bless you. Thank you very much. Okay, got that one. Doesn't Pfizer have good dividends coming up? Well, yes, they do. But is it see, it's one thing, Lindarella, it's one thing if they have good dividends coming up. Are they at the right place to buy it? Okay, because even though the dividend is coming up and that's on a certain date, well, where's the stock now? Is it going up? Is it going down? Is it going sideways? What is it doing? Because even if it has a good dividend, you don't want to buy it at the high. Okay, and you don't want to buy it as it's dropping. Okay, stocks go up, then they go down. And when they go down, they hit a bottom, turn around, and guess what? They go back up again. That's when to jump in. That's when I jump in. Because I see the 30-day high. I see the 30-day bottom. It turns around, goes back up. That's when I want to jump in. Raffaello, please explain how you manage stocks that don't get called away. Well, here you go. Raffaello, rule number 1, never buy something you don't understand if you're not willing to hold on to it for the rest of your life. It is an investment. You're buying something and you're hoping that it continues. Okay, so here's the thing. You got a company. Let's call it Macy's. They show up to work 9 o'clock every morning for 100 years. They are consistently profitable for 100 years. That makes sense to me. Now you have a new company that they're only 5 years old. Okay, for the past 5 years, they have been profitable every year. Which one would you choose? Me, I would choose the one with 100 years of increased profitability. Only because they have proven themselves over a century. Not 5 years, not 10 years, 100 years. What was said about SPY? Okay, what was said about SPY is take a look at the numbers, specifically the dividends. How consistently has SPY increased its dividend payments to its shareholders? If you want to invest in SPY, great, wonderful. What did they do last year? What did they do the year before? What did they do the year before? Are they consistently profitable? Yes or no? Okay, you shouldn't be investing into anything unless you know how to check the investments to see if it's right for you, because we're all different. We all have different goals. We all have different dreams, different desires. Mine is consistent profitability. If they're not consistently profitable, you're not getting my money. It is actually that simple. You guys can do whatever you want. But if the company's not consistently profitable, I'm not investing my money there. It's that simple. Okay, I'm terribly sorry. There are no safe spaces. I'm not going to give you a participation trophy. I'm not going to do anything. If you're not profitable, you're not getting my money. It's plain and simple. There are other investors out there. Ask them. All right, let's keep on going. Cameron, never heard of it. So every week you choose your covered calls based on which ones are doing dividends in 2 weeks. Basically, Alice, yes. What about World War II? Johnny Cash, what's happening? Well, what about World War II? That was decades ago. Ehab, how's it going? CLF, no. Cliff, no. Sorry. Ford, we looked at Ford earlier this morning. WWII stock. Okay, sorry, dude. Johnny Cash, we're past 11:30. If you want to jump back in tomorrow, I will be here tomorrow night. Same time. We can ask that question then. Samuel J. Leo. Don't like Robinhood. Okay. Jesse Rock. Glad you like it. Okay. Okay. Thank you. I was in Boston, Massachusetts for 2 weeks. It was amazing and beautiful there. Yeah, you probably went to the tourist section. You probably didn't go to the south side where the projects are. This is actually factual, very well said. Brent, thank you very much, Brent. Derek, I have a question. Okay, Derek, I'm terribly sorry. I try to get to questions as soon as I can. I try to answer each and every question. Sometimes it's not going to be as fast as most people like, but I do answer each and every one. Okay, Angel 1, I work full-time from home. Do you think I can still benefit from your morning group? Been studied for someone with more free time? No. Okay, all right, so Angel, the thing is, it's created specifically 10 or 15 minutes. That's it. Okay? You'll hear every video I say, hey, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader. I only want to sit in front of my computer doing my personal trading for 10 or 15 minutes. That's it. 1 hour a week. If I'm getting 1% for 1 hour a week, yeah, I make a fat return for 1 hour. Okay? What is a covered call? Holy shit. Okay, dude. Oh, that's a girl. How are you? Sorry about that. Living consciously. Sorry about that. I didn't take a good look at the picture. A covered call. Basically, you buy the stock. You sell somebody else the rights to buy it from you at a certain price by a certain date. Here, I like weekly options. I like to buy a stock on a Monday, sell a covered call on a Monday at the exact same time that expires Friday. So I'm into a stock 5 days, preferably. Okay, Ehab, you want to look at Ford? You're going to have to ask me tomorrow. Sorry. Derek, you can ask. He tries to get into everyone. Thank you, 86. Ha, ha, ha. Real motivation. He thinks it's funny. I have no idea. Chemico. Okay, Raymond Cipollino. Reno Cipollino. Chemico. Never heard of it. Ask me tomorrow because it's late and I want to go to bed. Hello. Thank you, James, for all you do. Appreciate it very much. Angel, you're welcome. All right, Texas Brown-Eyed Girl. So when we sign up on your website, we become your student. You'll kind of guide us on who to sign up. Okay, Texas Brown-Eyed Girl, you've been here for a couple of times. My advice to you is the same. Drop me your phone number. I will give you a call. We can chat. It's the simplest and easiest because here I can only react to a couple of sentences at a time. Do you trade banks? Yes, I do. Okay, CH, yes, I do. I have like 5 of them I like to trade. How do you feel about VYM and VIG? Thomas. Okay, Thomas, you're new here. I can tell because if you were not new here, if you've been here over and over again, you would not be asking me about VYM and VIG. Okay, my advice to you, Mr. Thomas, go into a financial website. Take a look at how consistently does VYM and VIG increase their profits. The way you find that out, you have 2 choices. You can read all of the quarterly reports, all of the annual reports. Okay? You can read all that. Or you can go directly to the dividends. The reason I say directly to the dividends, a dividend is a portion of the profits the company pays to their shareholders. So, if the dividend increases year after year after year, the profits increase year after year after year. Okay, CH, the RSI, no, I do not. Now, CH, you're relatively new here. When I say I created this strategy for my 9-year-old daughter, it had to be simple, safe, predictable, consistent, and no way for her to lose. Nowhere in there whatsoever does it have anything to do with the Fibonacci numbers. It's nothing to do with the Greeks. Has nothing to do with the delta. Has nothing to do with the RSI index. Has nothing to do with the moving averages, whichever. Simple, safe, predictable, consistent. It's a simple strategy. Please don't make it more complicated than it needs to be. If you need an RSI, hold on a second. If you need the RSI index or the RSI movement to tell you that this is the high and this is the low, this is where it was 30 days ago and it went down and then it went back up. If you need something other than that to tell you 30 days ago was here, here's the 30-day bottom, here's the 30-day top. If you need the RSI to tell you that, this is not right for you. It's simple. It was created for a 9-year-old. My assumption is you're older than 9. If you can't tell, there's the high, there's the low. 30 days ago it was here. Today it's right there. If you can't figure that out without some assistance, then you have some issues that I can't help you out with. All right. That is clear. You got that one? All right. Please, don't make it more complicated than it needs to be. Okay? Here's the high, here's the low, here's where it was. Down, up. It's simple. Okay? All right. Whose trade platform should I use? Charles, I cannot tell you what to use. The only thing I can do is tell you is that I use this one. I've been using this for 20 years. Okay, now Tom Sosnas and a couple other guys put this together. It's awesome. It's great. They sold it to TD Ameritrade. They got bought out for Charles Schwab, so Charles Schwab owns it. So I've been using the exact same trading platform for 20 years. Now, 15 years ago, I did write a book on choosing the right trading platform. But that was 15 years ago. The book is still available on Amazon, but, it was a long time ago. Do you have those crypto USB things that people say it's a safe way to protect your investments? Now, that's an interesting question. No. The interesting thing about crypto, now I'm not quite sure you know this. It's a cold wallet. Yeah, I get that. Crypto is like a teenager. The reason I say that, it hasn't been around for 20 years yet. Okay? Teenager. The stock market has been around for 400 years. Options have been around since the 1970s. Well, that's 5 decades. That's 50 years. 50 years. Crypto, not even 20. You're basically giving your keys to your Rolls Royce or your Lamborghini to a teenager. Why would that make sense to you? I don't do crypto because it doesn't have historical performance behind it. Now, don't get me started. I do realize that we are moving to a digital society, and I love the idea of cryptocurrency. However, there is no way to safely, predictably, and consistently make a safe return with crypto without having to sit in front of my computer all day. So no, Can't help you out with crypto at all. Wow, we're at 46 minutes. I'm way past my bedtime. But wait, it gets worse. Yes, it does. Please, what do you think about Ford now? Ford is a no at the moment. Wait a minute. I think I looked at Ford this morning. I'm not quite sure. I don't think Ford, the numbers work today, because I looked at it earlier today. If so, I believe in investing in crypto. Well, I'm glad. You have fun with it. I don't. Okay, why do you get your money on Monday and not on Friday? Oh, Neil, why do I get my money? Okay, so Monday, if I buy a stock Monday, okay, that means I'm parting with my cash on Monday, and I sell a covered call on Monday. I sold something on Monday. I'm receiving money on Monday. Not on Friday, because Friday is the last trading day of the week. Options expire on Saturday, which means all the calculations are done over the weekend. First thing Monday morning, if I sold something over the weekend, it gets credited to my account on a Monday. And then I start the whole thing over again. What do I think of Oracle would be a good investment? Now, see, I like Oracle, but I haven't looked at the numbers yet, so I can't give you an answer on that one. Dave Jenkins, how do you do it covered calls? How do you teach your system to me if I'm interested? Dave, my best advice to you at this moment in time, being 11:15, I'm usually done at 11:30. My best advice would come back again tomorrow, ask the same question. Come back a little earlier so I can tend to your question. Now, there's about a couple hundred people that jump in here, and the questions just flood in, and I can't get to every question as it comes in, but I do answer every single question. It may take a little bit, but if you want to learn, come back again tomorrow. I'm here every single night. If you get your money on Monday and buy again on Monday, then you have no money again for the week. What do I need the money for? Ask yourself a question, okay? You get paid on a Friday, usually money goes into your bank. Great, it's sitting there. So, it's sitting there. My money is sitting in a stock. On Monday, the stock is unencumbered. I sell a covered call against it, I collect 1%. So, hypothetically speaking, okay, if I have $200,000 in an account, on Monday, I sell covered calls and get 1%. 1% of $200,000 is $2,000. So I now have $2,000 on Monday to do whatever I want. Following Monday, I get another $2,000. The following Monday, I get another $200,000. Why have money sitting around not collecting everything? 98% of all my money is invested in the U.S. economy at all times. Why? Because I believe in my neighbor. I believe in my niece. I believe in my nephew. I believe in my cousins. They all work at these companies. Dunkin' Donuts, IBM, Firestone, Ford, General Motors, General Electric. They work at all these companies. It's the U.S. economy. I have great faith. Makes sense. Thank you. Ludwin, thank you very much. Okay, so let's keep on going. So Dave, yeah, ask me tomorrow. I'll be giving more time. Holy bad guys, Neil, you get paid immediately when selling the option. Yep. Crystal. Uh-oh. I emailed you. Yep, Angel, I saw that. Okay, Angel, because you sent me an email on Gmail and it pops up on my phone. So I'm looking at my phone, thing pops up, and Angel sent me an email. Yeah, I'll give you a buzz tomorrow. Crystal, is SCHD a great DCA option for long-term investing? Okay, now I would love to tell you hell no, I would stay away from that thing as far as I could, but I don't know anything about you, so I cannot tell you anything, whether it's good or bad, for you. All I can tell you is I would never buy that piece of crap. Okay? Come back tomorrow, I'll give you my honest opinion from beginning to end on SCHD if you're interested. Okay. Sean Nispel, what about Marathon Petroleum stock? I like that. I have bought it many times. Yep. Little Prince says, right on. British Petroleum, more due. Okay, BP, all right. Lindarella, have a good night, James. Thank you for your help. You're welcome. Jesse, for your TikTok camera is better than YouTube. Okay. Lori, hi, how are you? Can a newbie learn this? Royce? Is that Royce? Is that right? Royce? I don't know. Yeah. Come back tomorrow. I'm here every night except for Friday night and Saturday night. Last year it was 7 days a week. This year 5 days. I take 2 days off. Thanks. Ehab, you're welcome. Can I get started with 10 grand? Sure you can. Really learned a lot from you. Mission accomplished. Brian, 1% a week should be amazing. Yes, it should. DJT, please. Sorry, dude. DJT is not 20 years old. Binance, no. Nice to meet you here, boss. Way to go. Almost done, almost done, almost done. Dina. Macy's, love Macy's. Oh, look at this. We're done. Yay. All right, Pat, thank you for stopping by. Pat, I'm here from 9 p.m. until 11:30. It is 11:52. I am out of here. Drew, seriously? Seriously, Drew, take a look at the numbers. Drew Benjamin, take a look at the numbers. How consistently do they increase their dividends? Carol, if you put up a question and I didn't see it, some reason or another it got blocked. So I have no idea what that question is. You have like 3 or 4 seconds to ask me that question right now, and I'll answer it for you. We're done over here. You guys have a great night. Okay, you guys over here. Johnny boy, nice seeing you. See you later. Ron, hope you learned something. And over here on Instagram, good night, James, Carol. All right, Carol, living the dream here and now. Okay, advanced micro devices, no. Palantir, no. When I say check the numbers, what I mean by check the numbers is how often have they increased their payments to their shareholders? How consistently profitable are they? 2 decades, 20 years? I don't think so. Take a good look at the numbers. Numbers don't lie. Have they consistently been profitable over the last 20 years? It's a yes or no. Pat, Bank of America or Wells Fargo? Yeah, I like both of them. Got it. Got it? Good. So she's not going to answer that question. All right. So bye for you guys over on Instagram. Bye and done. There we go. All right. I'm done. You guys have a great night, and we'll see you again tomorrow. Tomorrow. I love you. Tomorrow. You're always a day away. Thinking about